Something is happening in the IPO market that investors just don't fully understand. So if you own tech stocks, AI stocks, or just ETFs, then you're going to want to pay attention because what happens is going to directly affect your portfolio. Because SpaceX, OpenAI, and Anthropic are about to bring hundreds of billions of dollars into the public market, and that is directly going to affect your investments. And by the end of this video, you're going to know whether that's an opportunity or a risk. So this actually connects to something that we just talked in the previous video. So after this video, if you haven't watched, I would encourage you to go watch that one as well. Because a lot of things that we're going to be talking about, because these stories are going to now become connected more and more each month. So over the next 6 months, it is a crucial time to be an investor because we are about to see one of the biggest IPO waves in the history of the US stock market. SpaceX is already public. OpenAI has already filed and Anthropic has already filed. And together, these companies are worth trillions of dollars. So now naturally, investors are excited. Now don't get me wrong, the AI boom is real. The technology is real. And heck, maybe even the revenue is real. But that doesn't automatically mean that these stocks are a good investment at the given price. And that's exactly what we're here to find out today. So let's start with SpaceX. And this one is not hypothetical anymore. It is now trading and shares have surged to near $200 per share. The IPO became one of the largest in history. It was originally valued at $1.75 trillion. The stock came public at a price of $135 a share. Investors are jumping to get it. The IPO became the biggest in history, raising nearly $75 billion, and now the valuation is pushing north of $2 trillion. And honestly, I think investors personally are thinking about this completely backwards. Everyone is worried about the first big day pop. We saw shares surge 20%. And with that, now everyone is focused on one man, Elon Musk. But the real story and what's actually driving the stock's fundamental engines is actually Starlink. Starlink has generated more than $11 billion of revenue for SpaceX and is the financial engine of the company, which allows them to pursue other very ambitious goals. Because SpaceX today isn't just rockets, it's satellite internet, and now it's AI exposure through XAI and the broader Elon Musk ecosystem. And with that said, that is an incredibly powerful narrative that the market loves to latch onto. But the funniest thing as an investor that I see is there's just a fundamental catch. The company still lost billions of dollars last year. And to be valued at nearly $2.2 trillion right now, it seems rather asinine. And with that said, when investors are buying this stock, they're clearly not buying it for current profitability. They're buying it for future growth and what it could become. And that's a big bet on Elon Musk. And maybe that future arrives and maybe it doesn't. But I want to be very clear right now. That's exactly what you're betting on. You're not betting on the current fundamentals, and that can be a very dangerous game. Now with SpaceX covered, now let's talk about OpenAI. Because honestly, this is probably the IPO that most people want. Most people are familiar with the product. ChatGPT has exploded in revenue. ChatGPT became one of the fastest growing products in technology history. It has absolutely exploded in revenue and in user growth. And more impressively, the company is operating at a massive scale that no one even thought would be possible just a few years ago. We've quite literally never seen companies execute at this speed, at this scale, and at this pace. That's the good news. The less exciting news is when you look at the balance sheet, because OpenAI is still burning billions of dollars. And so what's the reason for that? Training models are naturally very expensive, building out the infrastructure and all the data centers are definitely expensive, and running the models themselves are equally as expensive. And that's the thing, because they have to prioritize future growth. But with that, their CapEx spend is going to be massive, and the company remains years away from any sort of profitability. And investors need to be extremely careful because OpenAI is not being valued like another software company. It is being valued like a one-of-one future winner of the AI race. And investors have to be careful because we all know what happens when you're buying a stock at peak valuations. And it's not so much that you're even buying it at peak valuations, but it's investor psychology. Everyone knows that when a stock gets priced for perfection, expectations are sky high. And everyone knows that when a stock gets priced for perfection, it's just investor psychology. They're expecting the company to beat. They're expecting it to blow away by a large margin. And that's exactly the problem with OpenAI right now. So the business is real, the product is fantastic, and nobody is disputing that. So before we get into Anthropic, I genuinely want to know if all three companies were available at today's valuations, would you be buying them? Yes or no? I'd genuinely like to hear your answer. Feel free to comment it below. So again, with that said, here's Anthropic. And this is where the story gets extremely interesting. Because while the public and headlines are still focusing on OpenAI, they might be missing the forest for the trees here. Because Anthropic quietly ate their lunch and is becoming the #1 company in AI. And how do I know this? Well, here's the plot twist. Anthropic just reached a valuation of close to $1 trillion, which actually now has surpassed OpenAI as of its latest funding round. So if we rewind back just a few months ago, people never would have expected this. So the real question is, okay, what's driving that growth? So Anthropic's revenue has exploded. And what's funny is most investors still don't understand where that revenue has actually come from. OpenAI built the consumer brand. Think about it. All your friends at university, all your friends at the office might use OpenAI for day-to-day tasks. But that is not what Anthropic does. Anthropic actually built an enterprise business. A huge portion of the revenue actually comes from corporations directly integrating it into their everyday workflows. And the biggest difference between the two is that that's very sticky revenue, that's recurring revenue, and investors on Wall Street tend to absolutely love that. And the other thing worth paying attention to is Anthropic actually overtook OpenAI in enterprise market revenue. Is Anthropic actually recently overtook OpenAI in enterprise market share? And that still may be one of the most important developments in the entire AI industry. Because think about it. Because if enterprise becomes the real battleground, then Anthropic basically just declared victory over OpenAI. And that is very important because suddenly now investors will be realizing this. So why does this matter? And here's the part that most investors just simply aren't talking about. And this is definitely the most important part of the entire AI trade and the entire IPO thesis. Everyone is seeing the opportunity. Headlines are screaming buy, but the problem is that very few people are actually accounting for the risk. All three of these companies are being valued on an incredibly optimistic future. Think about it. SpaceX lost billions of dollars last year, and it's at a $2.2 trillion valuation. It is trading at over 120 times sales. And the craziest part is that these sales might not even occur. We know Elon Musk is a great entrepreneur. We know he is super ambitious. He has hit a lot of targets, but he does tend to miss targets. And at this valuation, it is not okay. And at this valuation, the stock has priced in way more than future perfection. And on top of that, OpenAI still loses money. Anthropic just became profitable. And these are companies that are valued at $1 trillion each. So with that said, this is where things get very dangerous. Because at these valuations, you're not only pricing in that future growth to be perfect, you're pricing in no competition either. And that has to stay manageable for many years. So when we think about it, that's far from guaranteed. You have names like Google who are competing against them. You have names like Meta who are competing against them. You have Microsoft competing against them. These are not companies that'll just roll over and let Anthropic, OpenAI, and SpaceX take the entire cake. So this is clearly not a winner-take-all market. And by the way, if you want our deeper watch lists, our portfolio updates, and the research that we're looking at right now, I'll leave the Patreon link below. Now let's talk about what we're actually going to do. So look, I want to be direct with you. I think SpaceX is a remarkable company. I think what OpenAI and Anthropic have built is genuinely impressive, but I just don't love them at these valuations. The technology is real. The revenue is definitely real. These are not frauds. But I think that these IPOs at these prices and this market are one of the best opportunities that I've seen for retail investors to lose money. You've got three companies with enormous losses for a future that is pricing in everything to go absolutely right. You've got tiny floats engineered specifically so that there's a first day pop that insiders can offload their shares into. Not only that, you also have lockup expirations coming where insiders can unload into the public market as well. You've got 200 billion in new supply about to compete for capital in an already stretched market right now. And perhaps most importantly, you have a competitive landscape where other trillion-dollar juggernauts are competing so that any of their competitors do not have a durable advantage in this market. That is not a great setup, and that is not somewhere where I would want to put my hard-earned money into. So could these stocks still go up from here? The answer is yes. The narrative is real. The momentum is real. The hype around these names could put capital around the entire market and push valuations far higher than even where they're at right now. So if you're trading momentum, that's fine. But if you're not, you have to be extremely careful. But if you're a long-term investor and you're thinking about putting real hard-earned money into these prices at these valuations because everyone is excited and you'll feel like you miss out if you don't, then that is an exceptionally dangerous position to be in. So drop your thoughts below, subscribe if you're new, and I'll see you in the next one.